That lived up to the hype, my friend. Welcome out, halftime crew. This is Maki and Martin, also known as No Justice. Well played, sir. Well played.
Just for any of the coaches that are watching later who are worried, I did get that score from the free content on YouTube, so we won't get banned for playing that music, which is known as the Ride of the Valkyries, by the way. I had to look that up.
Very nice, very nice. Well, I am officially impressed. Looks like the halftime crew is all right with it as well. So
hashtag
that was
no justice. No HTC today. Hashtag no justice.
That was the first time I got to see that as well. Very good way to start the trading week. Good morning, tackle traders. Great to see you. I hope everybody had a fantastic weekend. Cody, how about you? How was your weekend, my friend?
Oh, I did have a fantastic weekend. I spent it editing a lot of videos, as well as on Sunday, my wife and I, we went for a hike. Then we went to the beach, and we got some mimosas. So we had a pretty fun weekend.
Very exciting, very exciting. I watched season 2 of the OA. Yeah, Chain watched about 8 episodes, I think there were.
Oh, wow.
Weird show on Netflix. I enjoy it. I enjoy weird shows, so my cup of tea.
Very well. Well, first of all, since we did have the Twitter poll, let me go ahead and bring that up.
It was a runaway. It was a runaway.
It was easy to run away. Let me go ahead and share my screen here. Share. All right. Where is... Let's go to the Justice page. The Team Tackle page, excuse me. All right. So, as you guys know, we did a poll. Oh, wow, we've posted a lot since then. Poll on the names, and they were not even close. It was definitely a runaway. No Justice and No Justice name. So we actually ended up combining this. This is No Justice with Maki and Martin. So we're a little dictatorial on that point. So even though we gave you a democracy, we still changed it.
He did. Although I got to give a shout out to Martin. He brought up Frody for the name, and that kind of led us. We were chatting a little bit to Frody and Friends. So I thought about adding it, but I thought that'd be cheating. But shout out to you, Martin. That was a good call. I got a kick out of that one.
All righty. Well, let's jump right into it. Lots of things going on in the market today, or lots of things just news-wise. So actually, let me start off with, and I know you said you don't follow the news nearly as much as other traders do. Is anything in the news between the Mueller report, some economic data, any of that caught your eye today?
Not particularly. And let me kind of clarify that. It's not that I don't believe in the news. I don't believe that the news headlines impact today in a real way beyond price action. You know, if this is the start of a recession, just as an easy example, I have a hard time believing that's starting up on Tuesday, you know, but usually it isn't, right? And so that's kind of how I take the news. Short term, I kind of just let the market digest a little bit from a price action point of view. Obviously, that stuff is important long term. I don't want to make people feel like I ignore it or that you should ignore it. But for me, you are right. I put less emphasis on the day-to-day news rumblings than probably a lot of other traders personally.
Yeah,
so right now,
yeah, what's your thought on the market?
The only thing that I would say, it's not really the individual news stories. It might be the collective news stories. If we start to see things break support, which we're holding support, putting up a heck of a fight this morning. It doesn't seem like anybody's too sold one way or the other just yet. But if that leads into things starting to break down, then it can kind of have that snowball, or I call it domino effect, where basically something, you know, pushes below support, then something else pushes below support. It works the other way too. We saw a lot of this during our January run up, just kind of one after another breaking of resistance, one after another buy signal in different areas. So that's kind of, as opposed to one particular news story, I don't really look at it that way right now personally. But it, you know, if we do start breaking, that's going to be the headline. It's going to look scary to maybe the average investor, whether it should or shouldn't. So more the pulse of the market versus the actual news story is generally my philosophy.
I can definitely agree with that one. And I like how, you know, you're talking about support here, and that 2,800 level really is a key level. Looks like, we dropped below it this morning, but before the day's even halfway up, we're sitting right at it. We keep just playing with that level. The market's not sure if it wants to hold there, if it wants to move down, wants to move up. We just got to, be cautious, wait and see, and watch it.
Exactly. I mean, at this point in time, I think if you can definitively say one way or another, you're definitely quicker on the things than I am. And my hat's off to you there. Right now, basically one of those doji type of days in that 2,800 area, hanging around right around its rising 20-day moving average. So, for me right now, this is really just kind of probably what I would have wanted to happen after a day like Friday. Whether we sell further or we, catch our footing and this presents a nice pullback opportunity for us, later in the week, we will find out together. But the fight, that was what really concerned me the most on Friday, especially by the end of the day, is really the lack of fight in the market. That's what wasn't the red candle. It wasn't that there was selling on a Friday. It was that there wasn't a heck of a lot of fight. But we did kind of start to hold our own in that 2,800 range, as you pointed out. I think that's kind of the first line in the sand. But really, our swing low is way, down in that 2,720. So again, for me, things may change, and they certainly could. We, catch a rally, starting tomorrow into Wednesday, and then make a lower high on Thursday, and then break today's low next Monday. All of a sudden, that's a different story, right? But that's getting ahead of myself. As it is right now, we're holding support in the S&P 500, which means perfectly legitimate if I want to get less bullish, but I don't really have the rules in place that I could go bearish personally.
Yeah, I don't see this thing as moving bearish yet. I'm still sticking with my bias. As I talked about on the newsletter, we did as a collective group with the coaches, we moved to the 50. And the reason why is that, we have this bullish uptrend. We have that line in the sand. We had the down day, but there's nothing that says we have to go bullish on this or bearish on this.
Exactly. And it was, especially on Friday, I mean, it was going to be really hard. I talked about it in the market recap. There was really nothing that could happen on Monday morning to get me jumping in as a bull. At the very least, we needed a day, to build a doji. And so I think, that is a reasonable approach. And that is the approach that I share with the other coaches, kind of just, being a little bit less bullish than maybe I was even on Thursday when we broke out, of the NASDAQ, gun to my head, I still would go bullish. He said, Frank, you've got to make a trade, bullish, bearish, or you get thrown into the pit of doom. I would go bullish, pretty easily, go with the trend because, well, I don't know how this one will work out, but I know historically that's a pretty good call.
Well, before we get to the NASDAQ, let's jump on over to the Dow, even though my computer seems to want to just spin and spin and spin. There it is. So we talked about the Dow on Friday as looking a little bit weaker than the S&P. Today, story hasn't really changed much. It seems to be holding this middle channel that it started forming. What are your thoughts here on the Dow?
Yeah, I think you're in much more neutrality in the Dow. I think you nail it right on the head. Haven't broke support at around 25.2, which is a kind of our recent swing low pivot point there. So again, have a hard time wanting to go bearish if things aren't breaking support. But at the same time, I think I think at least for me, clearly and objectively showing more weakness than the S&P and the NASDAQ as well. Overall, not a bad day here today, kind of bouncing back a little bit here. But yeah, I think for the most part, I'm looking at this more in that neutral type of range than I am, certainly than the NASDAQ, but even than the S&P.
I couldn't agree more. I just see neutrality here. Nothing, not looking one way or the other until I can get some confirmation either above 26,000 or below about 25, 20.
Yeah, about 25.2-ish.
Yeah,
so
somewhere in there.
Yeah,
so right. Now, you mentioned the NASDAQ, and one of the pieces of the NASDAQ I do want to talk about is Apple and their new strings system. But before we get there, what are your thoughts here on the NASDAQ?
Probably the most appealing area for potential pullback for me. Again, not today. We are kind of having the same general type of battle on the intraday on the NASDAQ. So it doesn't seem like the new entry day for me personally, at least, but we still are, very much holding trend. I mean, we're even, we actually closed above the 9 EMA. We're a little bit below it currently right now, which is not a huge deal, but it did at least show a little relative strength on the selling. Obviously the relative strength leading into to Friday, I think kind of goes without question within the NASDAQ. So from a bullish pullback, if that's the way that this market wants to go, and that is the way that I'm leaning personally, this is an area that, again, probably not until we're probably talking Wednesday or Thursday for me, potentially at the earliest. Pullback is definitely where I'm at. Anywhere into where we are today, into that 7,200 range would be very interesting from a pricing perspective, in my opinion. Just have to get the signals when we're ready to at least try off of those levels.
Absolutely. And I mean, if we were to come down, right into this area right here, slow down tomorrow, doji tomorrow, confirmation on Wednesday, I would really, really like that. Now, like I said, what I do want to look at is Apple. So Apple recently announced that they released their streaming service, which is supposed to be a direct competitor of Amazon Prime Video and Netflix. Have you heard the news on this? What are your thoughts?
I've heard. I don't really have too many thoughts. I think Apple. I still think iPhone. Whether I should or shouldn't, I'm an old soul, so it takes me a while sometimes to go, get too excited one way or the other from that news perspective. I do think it's interesting, and I think it's probably, it's easy to say in hindsight, but it's also kind of like it feels like it was almost inevitable. Not that I ever spent any time thinking about it, so it's news to me like everybody else. But if you kind of just sit back, and of course Apple, got into that arena. It seems like that was the inevitable outcome eventually.
Absolutely. And, so Apple was always looking for that next iPhone sale as their source of revenue. They're selling that. Now they do have like the iTunes subscription, but that's kind of faded away. But with the main source of revenue a lot of these companies have are subscription-based revenue. And Apple didn't necessarily have a solid subscription base. I think this is their way of tapping into that simple, $10, $9.99 a month that most people don't worry about paying. Now, to spend $1,000 on an iPhone, every 2 years, like that's a big thing. But to ask someone to spend $9 to get, an array of content they can view, it's one of the reasons that Netflix and Amazon do so well with those viewing platforms, and Apple being the juggernaut that it is. If they want to step into the arena and start, playing in that ball game, I think they have more than enough ability to do so.
Oh, absolutely. I learned a long time ago, don't bet against Apple. Nope. So, love it or not love it, those are the questions, but hate it is never an option for me. So.
And this is starting, and Apple looks, kind of like the NASDAQ. It looks like it's going to have a nice little pullback here, which for anyone who's been looking to get an Apple where, you weren't sure there and you missed this one, if we get a pullback here, this could be a time to get into Apple either as a swing trade or, as you said, never been against Apple. You can get into Apple as a long-term investment growth stock, which you should have some of that in your portfolio, not just swing trading.
Oh, absolutely. Yeah, I'm definitely interested in the next couple of days in Apple. If we do get a pullback in the market, Apple will definitely be on the look. Make sure you make time to look at them list. So.
And as James is pointing out, the keynote today, 1 p.m. EST on Apple's announcement about this service. So we'll see if they get a little pop intraday just from that coming out. That should actually be here in the next couple hours EST, right?
Yeah, that's in 15 minutes, my friend.
All right. Well, we'll see how that goes. Until then, we will continue trucking on. Now, the Russell is the only one that's slightly above positive today. What are your thoughts on small caps?
They concern me the most. Unlike everything else, the Russell has actually broke support. At least by my standards, taking out that swing low, closing below that 50-day moving average. Now putting up a little bit of relative strength today, as you said, but still below that breakdown point. By definition, at least in my mind, we have made lower highs and lower lows right now on the Russell. And so for me, a little more on the bearish side than the other indexes are. This is first, basically are testing the second day of that break. So it's still early in the game, but that absolutely concerns me from a purely technical point of view.
Man, you are breaking up a little bit, so hopefully we don't lose you here. Your mic's getting a little scratchy there, Frank. But
Maybe it's maybe.
I do see the lower lows and the higher lows that you're seeing on this. The NASDAQ does look the weakest. It is currently sitting at its old support level back here that it wanted to make sure it stays above. So we'll see if it might dip down below it. You put the support zone lower and make it more of a zone, but it's currently sitting right below that 50 and then, right on the 100-day moving average. A lot of traders don't like the 100. I personally do. And it looks like it could hang out here. I want to see it get back above the 50 before I can change. I'm slightly bearish on the Russell right now.
I would agree with that. At the very least, I think you have to get above 15 and a quarter before you can kind of add a little bit more pure neutrality.
I want to call it neutral. I do. I want to be neutral on the Russell. I want to be bullish on the SPY. I want to be neutral on the Russell. But right now, it's like I'm bearish. I have to be.
Yeah, and that is something that, I'm going to keep in mind, not freaking out or anything like that, but somebody has to be first, right? Someone has to be the first to break resistance, to break support. And right now, the rut is the first to break support. The other indexes are holding up, fairly well in my mind, but I'm going to keep that in mind as we're moving forward. So that's definitely one of those reasons that I'm taking a little less bullish approach than I might be otherwise. If we were holding that support, I probably would be at least a little more bullish, broadly speaking.
Yes, absolutely. Well, let's move on to the dollar. Now, talked a lot about the dollar. We do have a slight down day. Personally, this doesn't change my bias. I'm quite bullish on the US dollar just because it is the most fiscally responsible, and it pains me to say that. And I'll every time I say it, I'll repeat that it pains me to say it, just because the chart is showing a bullish setup. But what's going on economically, what's going on globally, those things don't necessarily sound good, but they don't necessarily sound bad for the US dollar. What are your thoughts on the dollar here, Frank?
I think you hit it right on the head. Now, as anybody who knows me, I've been neutral on the dollar within this larger trading range for quite some time, and today has done nothing to change my outlook. I still am looking for it to eventually come out of this long-term range before I'm really all that interested in it. I don't do a lot of day trading Forex like you do, which of course this is a pretty decent range from that perspective, yeah. Right? From a more swing perspective, although in hindsight there have been some very interesting moves. I still look at it overall neutral, but I am with you. I do, for a long time, I would say, neutral with the side of bearish or bullish. And then I just kind of said, hey, I'm neutral till it comes out of this. But right now, it's neutral with the side of bullish for me as well.
Yeah. And I mean, right now it is kind of hard to say. You see this moving average soup in here. It's just there's so many averages all kind of sitting right there. It does need to make up its mind on what it wants to do. Even when we had this consolidation pattern and neutrality, all these moving averages just caught up. And now they're all just kind of getting there, and the 200's on its way. This is becoming just a very soupy, all the averages coming together. It needs to make up its mind, in my opinion. But I am bullish on the dollar. I want to see this thing move back up to 97.5, if not above that. And if the other reserves and various currencies keep doing a terrible job at regulating their own currencies, then the US dollar should gain some strength from that. So it's not a matter of us being responsible as much as it is them being irresponsible.
It's all relative, my friend.
All right, let's move into crude oil. Oil doesn't seem to be doing very much today. No, I don't want to do a trade on that right now.
Maybe you do.
Maybe I do. I mean, we are starting to get a little high base type formation. We had 2 down days, a little baby candle today. I'm still looking for a bullish move on oil. This thing did obviously reverse, and it's showing all the characteristics now of a uptrend. And I would not be opposed to making a trade on oil, but I want to see it get above the $60 level as my main signal to then make a trade on it. What are your thoughts?
Fair enough. Yeah, and I think the pullback into that 58 zone, I think it's incomplete at this point in time. But I do think a pullback into that 58 zone with the right signals could be an interesting development. Like I said, kind of a doji day here today. But price action wise, an old breakout point, our rising 20-day moving average, like you said, we have established some bullish momentum via higher highs and higher lows. So, I don't think a pullback in my head is out of the realm of possibility. it is out of that today. But, into that 50, I could be interested. I have resistance at around just shy of $62. So my expectations are this, recent level in that 60 range, not to be a significant level of resistance, a level that we should probably keep an eye on for sure. But, at least for right now and for better or worse, I don't really, if I were to get good signals, from a pullback perspective, that 60 wouldn't keep me away from potentially looking at them.
Absolutely not. And I'll, with this uptrend here, you go over to USO and you could just be selling naked puts on this thing constantly. You don't necessarily even need that break. Actually, right now with it kind of pulling back, making a higher low or lower high, excuse me, this could be a moment to sell and, naked put down here, collect a little cash flow, add into this.
Nothing
USO.
At all wrong with that.
No, nope, definitely not. Now, I realize I skipped over looking down at my notes here. I want to move back to the market and talk about what the big headlines were that scared the bejesus out of everyone on Friday. And that's the yield curve, or the foreshadowing doomsday.
Exactly. That was the run for the hill. I don't know, whatever you want to call it. I thought you did a fantastic job in the newsletter, kind of going over that, even some stuff I didn't know in there. I enjoy Cody's newsletter a lot, just because he's a lot more, news oriented. So I really get a lot out of it and appreciate.
Well, I mean, it is the newsletter, so I fear I need to look at the news a little bit. So
yeah, there's a reason they didn't ask me to do that newsletter, right?
So I do want to just kind of touch on it. So on Friday, we all heard the headlines of, yield curve inverting, run for the hills, fear. But that's the news's job. Their job is or the media's job. The media's job is to report the news and raise hell. I can't remember who quoted that or who said it, but I love it because it's absolutely true. Their job is not to talk about how things are, rosy and going well. They rarely do that. They only do it when they kind of have to. But even when they have nothing, they will. Sometimes the story will last 2 weeks because they'll keep pounding at it. Sometimes it'll last 30 seconds because another bad event happens. They'll move on to the next one. But all they want to do is report the negative things. Now, with that being said, when they talked about the yield curve, like yield curve inverted, well, the actual black cat omen signal for a recession is the 2-year and the 10-year inverting. The 2-year and the 10-year have not inverted yet. Back in December, we had the 5-year and the 10-year invert, and the headlines came all out, and I talked about how it's not the 2 and the 10. The 2 and the 10 are the ones that we look for. This past on Friday, it was the 3-month and the 10-year inverted. So again, it still wasn't the 2 and 10. They did mention, they're 2 paragraphs down in all these reports, they're like, the main one to look for is the 2 and the 10, which is not inverted yet. But they always hide that down in what they're saying because they want to create the fear of just the headline, yield curve inverted. So it wasn't that big of a deal. And as a matter of fact, today, the curve's already back positive. It was just a freak moment from the global economic data when people started jumping to a short-term safety, which was the 3-month bond. So as more people started buying those bonds, the institutions buying large amounts of those bonds, that's what pushed the 3-month yield up, which is why it inverted. It didn't invert necessarily because things were going down. It went up because people wanted some short-term protection from what they were seeing as a possible rough, month or so ahead. So it was people running to safety, just like utilities were up on Friday. Bonds are also a safety market. They're not necessarily going to go after the more expensive bonds like your 2-year, 5-year, 10-year notes when they don't see fear that far out. They see fear in the next 3 months. So for that reason, that's why they were buying up the 3-year bond, sending its yield above the 10-year. And that's why we had that inversion, and it's already back, which means it's a fear on, fear off market. Don't worry about it, guys. Seriously, it is just headlines trying to stir up drama. This, to me, like we said a second ago, right now it's holding 2,800. As long as it holds 2,800, we keep that neutral bullish bias on the market. Went on a little rant there, but I did think that we need to cover the yield curve just because it stirred up so much fear on Friday. You could see it in the candle itself. And we still have a little bit of that fear here on Monday. But I don't think it's warranted. And I actually think that we should look for a doji confirmation, something to help us back in. And, don't play it based on fear, play it based on the technicals.
So what I'm hearing is we had a recession on Friday and it's over now.
And that's the other, okay. Now you're giving me a soapbox. The other thing, recessions do not happen in a day. And it really does just get me anytime, candle like this, headlines are going out there. Everyone's freaking out. Oh my God, what do I do? Recessions don't happen in a day. One down day. What happened after that? We went back up. Down day. Oh my God, what's happening? Recessions don't happen in a day. What happened? We went back up. Okay, we had, 4 days. We had a week. Oh my God, what's going on? Recessions don't happen in a week. Recessions happen over months, is when the market and the economy themselves, which they're not one and the same, when they both start showing a downturn. So this one down day candle, and the next big headline they kept using was second biggest down day since January this year. Well, it's just them trying to fear monger. They need some sort of headline to put up there. But a recession doesn't happen in the day. This is not something to freak out about. This is just a pullback in my eyes right now. So yeah, recessions don't happen today. It was a one-day recession, and it's over. Everyone recovered. I hope you guys made it through. I went and got down in my bunker. I put my tinfoil hat on, and I started eating my rations, and I made it. It was
Well, I'm glad that you came out for Monday. I appreciate you showing. So.
Drama equals volatility. Yes, it does. Drama does equal volatility. And actually, I don't, Matt's not here. So we're gonna do it. We're going over there right now. We're looking at the VIX.
Let's do it. Let's do it.
All right. So yes, drama, market's down, VIX is up. And Matt makes fun of the VIX for that reason. Market up, VIX down, market down, VIX up. But it really does come down to when the market's down, people freak out a little bit. When people freak out and that fear starts hitting you, that's when the VIX spikes. That's when the volatility steps in. So the VIX may not be as useful as it used to be because of various reasons that we won't get into today, but it does show as a fear gauge of how people feel about the market. And yes, it's very easy to see that the market has a big down day, the VIX has a big up day. So take it with a grain of salt, but yeah, that's the VIX. Frank, what are your thoughts on the VIX?
For the most part, I agree with Maddie. I don't think it's all
broken.
that. I don't think it's all that useful anymore. But at the same time, I mean, if it helps a trader kind of get a better handle for an increase in volatility, because from that end, yeah, a big move up is going to be an increase in volatility. If it helps a trader get a better handle on the shifting mood, if you will, of the market, then by all means, I have no problem with anybody using it. I might not hate it quite as much as Maddie, but overall, I do agree with Matt as far as his take on the VIX. I'm just not as loud about it. So.
Absolutely. Well, jumped back to talk about the yield curve. So let's continue on through. We started with, I think we left off on oil.
Let's hit up natty gas. Let's not.
Natty gas. All right. So we've been very neutral on natural gas, not because it was a neutral chart originally. It was more of we're going neutral because we don't want our students to touch it. But now we went neutral because it's actually starting to look neutral.
Yeah. And it's starting to behave a lot more normally. The reason we all said, whoa, let's leave this thing alone is because it started to act out of character. Now, natural gas, if you follow it, I mean, it can go on some pretty wild rampages, but even by normal standards, that, November, December, January were pretty insane. And so whenever something gets crazy like that, I'll put you in timeout. I've got no problem.
And that's what we did. That's what we did with natty gas. Natty gas was in timeout for about 3 or 4 months.
Exactly. And I think with the way it's been developing over the course of the last, month and a half or so, I think it's starting to get to the point where, at least for me, while I don't think there's a signal today, I do think it's to the point where if and when I get a signal I like, I would feel comfortable saying it's kind of back to normal.
So what you're telling me is we put them in timeout. So let's imagine a little toddler here. Acted up. And it's like, okay, do you want to behave? Nope, don't want to behave. Okay, you're staying in timeout. All right, so now it's starting to behave. So this is when you kind of turn, you say, all right, are you ready to come out now? Are you ready to behave? Are you ready to be nice? That's what I'm hearing.
Exactly, and it seems like it seems like it's thinking about it now. It's still very much in this, roughly speaking, month-long trading range, and I think at least directionally speaking, until it comes out of that, it's a pretty difficult area to try to directionally trade. But really, a break either way out of this range, I think, can be interpreted as a signal. We actually gapped down to the bottom of that range on the open here yesterday, but at least as of right now, that's continuing to hold. So a break one way or the other for me is going to be a signal and potentially a tradable signal. I mean, you never know how that's going to look, of course, so can't say for sure. I particularly think the break to the upside is an interesting signal. If and when that happens, we're a ways away. Legitimately, probably not likely to happen this week, although obviously I don't know that. But that takes us above a 50-day moving average, above of course the zone that we're trading in, through that recent pivot from back in January. So I think from a technical point of view, forget about what the instrument is here for a minute, because if I'm not comfortable trading natural gas, then I'm not going to trade it. But from a purely technical point of view, that would put us above the 9 weekly. There can be a lot of, what does Noah call it? Technical
congruency.
Congruency. Yeah, that's too fancy of a word for me. Lots of signals developing at the same time, at least potentially, if and when we break. And over in the recap, we've talked about this a lot. The longer it happens, the more comfortable I get with the idea of that. If we see that break, I actually think that's we'll see several interesting signals developing around the same time, if that's the way we want to go. Now, we could easily break through support as early as tomorrow, right? So
yeah, we could.
And so my concern from a bearish point of view is we have a heck of a lot of history at 250 on natural gas, and I don't really feel there's probably enough room to try to trade to the downside, at least from a swing trading perspective. So if we do break to the downside, I might be waiting for maybe a double bottom to develop, take another run at that break. But there is a lot of history at 250 on natty gas.
Absolutely. And I'm looking at it. I'm hoping the temper tantrum is over, because I'm ready to start selling some naked puts on natural gas again. It's a very simple strategy. And, after this happened, it was like I cashed out and I waited, and I've been waiting and waiting. So I'm ready for it to start behaving so that I can start, adding some naked puts on there. Naked puts, fantastic cash flow strategy with natural gas. But
can't disagree.
Yeah.
Cannot disagree.
I'm hoping the temper tantrum is over. But from that, let's go ahead and move on to gold. Now, there's been a lot of different talks. A lot of the coaches have different opinions on gold. What is your opinion on gold?
I'm on the long term. It's in good shape. Medium term / short term, I'm leaving it alone. It's not something that's being very well behaved. We saw it try to break resistance several times, and we've got a nice break so far here today, working up towards that 1325 resistance zone. So I understood where that argument was, folks trying to buy in on the break last week, and I didn't disagree with it. I just didn't think it was a very interesting signal, although in hindsight, maybe I should have. So
quite possibly, yeah, I did break above the 20 last week, and it that could have been the signal to get in. Now, so you missed that signal. Are you rushing to get in now because you feel the FOMO? The fear of missing out, is that getting you right now?
No, not in the slightest. If it wants to run, then it can do it without me. I don't know exactly what I'll need to see. I think I'll know it when I see it, or at least I think I will. But right now, it kind of needs to get back into a trend. Still a pretty messy chart from a little bit of a larger perspective, I think, with support at 1280. Resistance at 13 and a quarter, obviously just shy of 1350, a major level of resistance. I'd like to see it kind of get back above that 1325 range and develop something new, personally, before I get too excited. At least that's where I am here today. I don't really feel like it's a great environment from a short-term trader's perspective. Again, today I look like a moron for saying that. I felt pretty smart saying it, on Wednesday and Thursday. So
see, but as traders, we have to drop our pride, because there have been so many times that I will distinctly say, I think this is happening this time, and then it won't happen. It's like, well, it didn't happen.
But exactly. You do this, and you're bound to look like a genius sometimes and to fool others, and you have to keep your ego in check. And
absolutely. That's why I like the prediction podcasts. If you're going to make a prediction, you always make a wild, outrageously crazy, outlandish prediction. Because then if you're right, everyone's like, how did he know? How did he see it? What genius was he able to? Like, how? But if you're wrong, people are like, yeah, it was an outrageous prediction. Like, why? I don't know why you ever said that.
Exactly.
So if you're going to make a prediction, always go for the crazy. So, I mean, I'm going to say gold's going to hit 2,000 by the end of the year.
Good advice. Good advice. I like it.
All righty. Well, when I look at gold, honestly, I love it when it's in the beautiful, bullish retracements. But as soon as it violated that right here, it kind of started doing a pullback. And then as soon as it came out, I'm just completely out of gold. To me, gold is in timeout because it's not behaving. I like it when gold behaves very naturally, makes high bases, makes bullish pullbacks. And that's all I have to say about gold is I'm not trading it as of right now until it makes up its mind.
I think that's basically where I'm at as well. That time will come.
Moving on to silver now. This thing's been in timeout longer than gold.
Oh, absolutely.
Right here when it had this ascending wedge type pattern forming, so it wasn't even quite a bullish retracement as gold was, where gold was, making higher highs, higher lows in a that bullish retracement pattern. This one wasn't able to do that, so instead it was making this more of a ascending wedge type pattern. Now, if we would have had a strong break above that, that would have been beautiful, but it kept double topping right up there. Couldn't even get to 1625, and then when it failed, this thing honestly has some bearish characteristics in my mind. What are your thoughts?
I agree 100%. I'm not a huge fan of it in any way, shape, or form. And it really needs to come out of this longer term range before I'm going to feel good about it. Whereas I understood the logic behind looking for the gold break, last week, I really couldn't get behind the same concept over in silver. Much more bearish chart. I agree with you on that side of things. And even though, we're having a decent day today, but congratulations, now we're running into the 50-day moving average. We get through that, theoretically, we've got, resistance at 1570, 1575 to push us back down. We get through that, we've got 16, then we've got 1620. And so there's just always something.
There's so many levels in here that can keep this thing down. And like you just started naming them off, and it's absolutely right. Is it going to make it, past this one? Is it going to make it past that one? If it makes it past that one, we have this one, then we have another one. There are so many levels that it has to get by to even be tradable.
Yeah, that's where I am with it. And really, I expect that not to change until we break out of this approximately 15 by just north of 16 zone. Now, that a break either way could be very interesting. When eventually it likely will happen one way or the other. I think that'll be really interesting when it does. The intermediate in between time, I'm really not that interested. It's just a very messy chart in my opinion.
Absolutely. Now, that kind of finishes up the market skyline. So first off, I'm going to say, guys, let's get those likes and shares up. And actually, I challenge all of you guys to talk about how great we're doing right now and tweet it at Matt and Tim about just how awesome it is without them. Now,
no, we appreciate if you mean it, but we're okay if you don't.
Yeah, let's just like flood their news feed with how great the No Justice with Maki and Martin show is going. just kind of make them a little bit jealous for not being here. Let's do that. Let's get some comments. If you're all watching this after the fact, definitely put it in there. What are Matt and Tim's handles? I think it's at Matt Justice and
Matt Justice 13 at Matt Justice 13 and at Tim Justice Utah.
All right, those are the Twitter handles. Go find them, tweet at them, hit them on Facebook as well, and definitely let's get those likes above that Fibonacci retracement. We need to show these guys how it's done.
That'll teach them for leaving us in charge.
We're talking about leaving us in charge. We took over.
That is true. Well, they had to open up the door. It's a known fact they opened up the door. We just kicked it down.
That's right. Yeah. They were like, hey, here are the keys to the house. And then we just took that battering ram and just broke in anyways. We're like, oh, it was unlocked.
Exactly. and I like to think I know Matt and Tim pretty well. They'll understand. They might not appreciate it, but they'll understand.
So, well, what are some other things going on? I mean,
well, I think with it being, preparation Monday, what do we call Monday? I'm always in after James, who always gives the names for it.
It's just a deep dive on
Deep dive
Mondays.
Monday. I think maybe we should take a stroll through a few of these different sectors, kind of see where everything's at here on a little bit of a deeper level, since it is Deep Dive Monday.
All right, let's do that.
Let's go ahead and do that.
Let's work our way down. Start with the basic materials as it takes its time to load. Now, I'm gonna let you kind of run this, but as I see this just right away, I'm seeing some neutrality here. What are your thoughts?
Yeah, we're in a neutral range, although we're at a very interesting price point, hanging out at support at the 50-day moving average. No surprise, this is where we're trying to put up a little bit of a fight. And so if we are going to see some upward movement, we might be seeing some companies within this sector at support levels or trend lines or breakout points. Might be interesting if I'm looking from a bullish point of view. On the flip side, we're kind of right at that spot where, at least in theory, we could break that support before the day is done. Which would be starting to generate some sell signals within that sector. So from a pricing point of view, I think we need one more day, one way or the other, pretty much across the board, to be honest with you, specifically here in materials. A close below this, I think you have to call it a bearish signal. I think you kind of hit on the head while we're in between here at around 54 to 56. We are neutral. And of course, a break above that 56 zone would, of course, be another signal to the bullish side for me, at least. So interesting week, I think, in store for materials with where we are on so many of these companies.
Absolutely. Completely agree with that. I mean, we're pushing up against the support level. If we break, it's bearish. So for that reason, I believe we had it ranked on the negative 40-yard line, which is neutral with a bearish bias. There's the method to our madness over here. All right. Now, communications. Communications, I thought, because it had such a great day, communications kind of follows tech a little bit just because of what the communication sector is built of. And it had that nice day on Thursday. Friday was down. I was saying in Scout Report how I thought this might be, one day, kind of pop fake, but doesn't scare me out of it. I'm still bullish on communications. What are your thoughts?
I approach communications a little differently because for a couple of reasons. It's a relatively new sector, as many of you guys know. It is comprised of a lot of things that used to be in tech, so it does share a lot of things in common. It's got your, Netflixes, your Googles, your Facebooks, your EAs, your Activisions, charters, things like that. I'm not really got a great handle, I feel, on how the pieces fit together in there. So I'm always a little cautious on the sector as a whole. I kind of look at it on an individual component or more industry type of basis. And beyond that, Facebook and Google are very big components of this ETF. So you can see back when we gapped up in January on Facebook's earnings, that was kind of just a product of how much of an impact a Facebook can have on this XLC ETF. So I approach this one a little bit more of a case-by-case basis. And I figure one of these days I'll get a little more comfortable with the sector as a whole, but hasn't happened yet. I do agree with you. We're seeing some interesting things. Google had a very nice week last week and looking like it's trying to pull back.
That it is.
Facebook had a rough go, but caught support second half of last week. And at least as of right now, we're holding that support level. EA finally broke out on Thursday along with the market. Netflix tried, although it's still kind of misbehaving in my opinion. I'm still not out of timeout for me.
It's got me wondering some of these things that are in the communication sector, like EA is a part of communications, right? Correct?
Right. Yeah.
How is a gaming company communications? Like, I think communications, I'm thinking networks that we communicate on. I guess.
Well, you don't play enough video games.
I guess these online gaming, that is some communication in there.
Yeah. There is. 2 or 3 times a week, I'll get on a call like this with my 3 brothers, and we'll go play video games. Some of them, that's the only time I ever see them. And so it is a big part of our communication strategy. I've met friends over the years playing those video games. I could tell you all sorts of embarrassing Matt and Tim stories when it comes to video games, especially Tim. Matt's either really good at a game or really bad, but he usually knows. And is okay either way. Tim, we've got some funny stories with Timmy, but I agree with you. I honestly do, and that's kind of why I take it more on a case-by-case basis in my head. And again, I might just be slow. That could absolutely be what's happening, but it doesn't really feel like these things necessarily belong together any more so than they did when they were broadly lumped in as tech.
Yeah, that's there. We could debate all day on where each of these go. If you gave them if you got too specific, you'd end up just with, 100 different sectors, and then that doesn't really help anyone.
Exactly. So I get the method to the madness, and one of these days I figure I'll feel more comfortable with it. Not
Awesome.
yet, but overall we are seeing a lot more positivity in the components of this ETF, regardless of what confuses me. We are seeing a lot more positivity. Obviously, they got caught up in the selling on Friday, are acting very similar to the broad market here today. But I do think it opened up the door for some potentially interesting things, especially if we catch some support this week and develop that bullish retracement from a broader perspective.
Very nice. Let's move on to energy now, real quick, just because I want to just keep pounding on that no justice. Marie pointing out that we had a lot of picks from the stock reports, an option report triggering right now. Well, hashtag no justice. They weren't there. I'm just stating facts over here. So no, I'm completely kidding. Obviously, they put in their picks before they left for the weekend, but still, it's just fun to pick on Matt and Tim being gone.
Exactly. And Mr. Fidget asked a good question as a way to provide stability to the tech sector. And I think that does make sense, to be quite honest with you. The tech sector was getting so broad that you're tied to a computer, you're tech, and so I do think, Scott, that there is some thought to that. I do agree with that on some level, at least.
Now I'm gonna jump to tech because I like that point, because when they started pulling some of these companies out of the tech sector to put them in communications, that did kind of calm down the tech sector a little bit. I mean, if we were to look back, a few years back before this communication sector existed, like it really was kind of jumpy. It would be gapping throughout the night and day of just what's going on before that communication sector was created.
Exactly. And, when you think tech, or at least when I think tech, I think Microsoft, I think IBM, I think Apple, and I think Intel and things like that. I don't really think Facebook, I don't really think Netflix. And so, I do think kind of trimming out tech was maybe the primary goal. It seems like that would make sense to me, at least. But yeah, you're right. It's kind of mellowed it out a little bit.
And that can always be a good thing. Boring can be a good thing.
I love boring.
Boring can be a good thing. Now, tech sector here, we had the big update on Thursday. I really like that move. Obviously, Friday got slapped back down. Today, we have a little small candle. I want to see this thing start moving to the upside. Maybe even one more down day I'd be happy with. Just kind of further make it a pullback. 2 days not a pullback. Matt Justice would be screaming right now. But I do want to see this thing either continue on down, gain some support, and then move to the upside. And I am bullish on tech right now. What are your thoughts?
Yeah, I mean, probably along with discretionary, probably my favorite area this week, especially from a pullback perspective. Anything around that 72, from here to 72 would make sense. It's been really working in line with the NASDAQ as far as 72, 7200, 74, 7400. So a pullback into that old resistance zone at 72, those rising short-term moving averages at 72, with maybe a little bit of slowing momentum, definitely a little more mellow today than Friday, although that's not particularly hard to accomplish. I do expect, at least from a potential pullback point of view, this to be probably my favorite area.
Absolutely. Well, let's continue on as we're trucking away. Now, we talked about oil, how we're seeing it. Energy, obviously. What just happened there? Oil, obviously, being the big component of how the energy sector behaves. This thing, looking like oil, not quite as bullishly as oil did look, but of course, there's the drillers and other factors that come into the sector. But I see this as a potential, want to see it start moving up above that 67, 66, 60 mark and to the upside. What are your thoughts on energy?
Yeah, I need to get back above 67. Now, we broke out finally on Thursday and talk about bad timing. Well, it sold off with the rest of the market. Now, maybe that's what it was going to do anyway. Maybe not. We'll never know. But we did try, and we were trying, really all last week until Friday. On Tuesday, ran right up to resistance, hit it on the intraday on Wednesday, broke through it on the intraday, was just not able to hold it, at least by my definition. Of course, holding it there on Thursday and getting caught up in the selling, or to some extent there on Friday. So I'm putting it right back into this trading range. It needs to come out of this range. If I do see that happen, I do like this area from a potential bullish point of view once I see that happen. But within this range, I don't like to directionally trade within ranges, if you can't tell. And so I need to come out of this. Exactly. A wide range maybe feel a little bit different, but a tight range like this, I needed to come out of this. Now, I really am very interested, and I have been for a while, of the break to the upside. So that is an area that I might like next week. I have a hard time seeing how it could all shake out this week to make me love it, though.
I'm right there with you. I want to see some trading signals. And Cold Corporate, off your question, with the doji, really what it comes down to of any pattern, I'll go ahead and pull up financials as I answer your question. With any pattern, because let's say financials right now has a doji, it's never just the one candle that you get a doji and you're like, okay, that's what I'm looking for. It's always a series of candles coming together to form that pattern. So there are multiple types of patterns. Obviously, we talk mainly about like chart patterns, things of that sort. But when you can put 3 or 4 candles together and see what's happening based off those candles, that's really what we're looking for. Not just going to see one doji and say, okay, it's done, it's stopped, slow down. Because we can get a doji and then tomorrow we get another break below the doji and it's continuing. Or we can get a doji and a break above it and now it's reversing. So it's always based off of not necessarily just the one candle that we have on the day. It's always a series of days that we can put together to then get a signal of sorts or confirmation to whether or not we want to trade it.
Yeah, absolutely, Cody. And one other thing to add, it's also where it is. A doji at a trend line, a doji at a support zone, or a resistance zone is going to mean a lot more to me than a doji right below support, which we see, of course, right now in the financial sector. So many of those banks just getting beat up. A little bit of a bounce back day today, but as you can see here on the financial sector, still below their moving averages. Very importantly, still below that recent pivot. And so a doji below this resistance, even though in my head I might think that this might be where it starts to rally back up, I'm not going to do anything about it because the doji's in the wrong place, if that makes sense.
Absolutely right. And financials have been the weakest sector. You look at it, they just were, even last week before the Thursday, that was the Friday that took us down. It was getting beat up on Monday and Tuesday.
Well, and that's the thing. And it wasn't getting beat up. I mean, those banks were getting annihilated. I mean, it was a free
up the volume.
Yeah, I mean, it was bad. It was bad. And so this is a concerning area. And this kind of is one of those areas that, just going to keep in the back of my mind, just like the Russell breaking support. Here we are on the financials breaking support too. So whereas most areas have not done that, starting to see some of those things happen. And again, maybe it's not a big deal. I'm not going to be terrified about it, but I am going to, keep that in the back of my mind. Things breaking support. This is the first time, really, from a big picture point of view, we've seen it all year long.
Yep. And now moving on to the second worst sector that we have right now, which is industrials. Industrials isn't as ugly of a chart, but it wasn't able to, keep up or make the double top or those higher highs like the market has. Instead, it's kind of making a low base, pushing down up against its 50-day moving average. What are your thoughts here on the industrials?
Much like materials, it's in a really important spot, in my opinion, where it really could go either way. I could see the argument to buy here because this is support. If support holds, we've got room to go to the upside. On the other side of things, if this breaks support, I can see the argument to sell because, well, we've made lower highs and lower lows via the break of that support zone. That hasn't happened yet, but if this support gives out, I think you have to call that a bearish signal. I know I'll be calling it a bearish signal personally if that does give out. Now, it hasn't happened yet, and support is tough to break, right? So if we are going to hold here, I wouldn't be terribly surprised. We still have to deal with that 75 resistance. So for me, from a bullish point of view, while I would understand buyers coming in off of this support level, that's really not my style. For me, I would want to get back above that 75. Beyond 75 at that resistance zone, I'd become, potential bull again within this sector. But in a much like materials, a very interesting spot where, this doesn't tempt you as a buyer, what's going to, right at support. So we'll see where that one goes. I'm waiting for confirmation above 75 or below the support level personally.
I'm right there with you on it. I can see the bearishness. I can see a, setup possibly, but I got to see. I mean, sitting at the 200, sitting at the 50. If we close below that, we're going bearish. Technology we've already covered. Staples. Let's go ahead and take a look at that. Staples, looking pretty good. I mean, they had a break on Thursday, and then with Friday being the down day, the big down day in the market, this still had a green doji. Now, this could be seen as a slipping my mind here. Tombstone, right? No?
I think it could, but I think you have to put it in the larger context of what was happening on Friday. You saw this in utilities. You saw this in real estate, these defensive areas that traders were going to early on Friday, all big green candles earlier in the trading day. By the end of the day, when the selling really accelerated in the broad market, they started to sell off on the intraday. So for me, I think it's kind of more a product of the day that was than anything specific on the sector, whether it's staples in this case or utilities or what have you.
Absolutely. And that's why I see this as, a strong sector in the fact that, market was down on Friday. We had a green doji where it didn't want to play ball. It wanted to, hold its position. Down day in the market today, it doesn't want to play ball. It wants to move upward. I see staples, as a really good setup right now.
I think you have to like it, and I don't really generally love this sector, but I do think you have to like where it's at technically, cleanly taking out resistance here last week. There's definitely some strength in the individual components within this area. Not a lot of resistance ahead of us for another $1.50 or thereabouts. So I do think as long as we're holding this recent break, I think that you're absolutely right. You got to look at this through some bullish eyes right now, as long as that break's holding.
Absolutely. Moving on to real estate, also looking like a nice sector. It had that breakout retracement from last week and the week before, pushing up against 36. Was try to get above it even on the down day Friday, but came back down. Up day today. How do you feel about real estate and?
Same as I felt for a while. I mean, its strength pretty much speaks for itself. It doesn't need me. I mean, you're above everything. You're hitting all-time highs on a pretty consistent basis on this ETF. You're hitting all-time highs on a pretty consistent basis on the component. We bring up AMT. They have done, I don't know what they're doing today, but one of the key components in this ETF, I mean, basically have just gone straight up, which is kind of weird.
AMP?
AMT, American Tower.
I was going to say, Ameriprise Financial is doing like the financial sector.
yeah, not okay, quite so.
No. Oh, geez, this thing has just been on fire in a good way.
Yeah, it's and while maybe they're a little hotter than some of the other areas, I mean, this is what real estate has been looking like throughout pretty much the year. So you're seeing all of these components showing this great strength. Basically, it appears to me that anytime somebody gets an opportunity to buy it, that's exactly what they're doing. It doesn't take much to sell them. And so whether, this is, an area you like to trade or, this is an entry point you'd be comfortable with, that's kind of an up to you thing. But I think really, trying to make a case against real estate right now is, I can't see it.
That's a fool's errand.
Exactly.
Trying to make a case against real estate right now is a fool's errand. Now, also, just want to point out, we do have a couple home builders that are reporting earnings this week. I believe D.R. Horton and Lennar both are reporting earnings. So keep an eye out on this. Those get good earnings. We could see, that move upward. If we get some, half decent earnings, it might just hang out. I do not think bad earnings on either of those companies will drag this sector down. It's just doing too well. Those REITs are really keeping it up.
Absolutely.
Utilities. Now, utilities is also just acting as a really strong sector. It had that break 3 weeks ago out of 57, came back, that break retracement, my favorite signal, and now it's moving to the upside. I believe we still have utilities as our most bullish sector of all of them. And I mean, look at it.
Yeah, I mean, much like real estate, you're seeing the ETF hit new highs, you're hitting the components hit new highs, you're above everything. basically any reason to buy it is a good reason. So yeah, I think it's very much with real estate from an overall strength right now, and I think it's pretty clear that they're the top right now overall. Maybe not my favorite areas to trade or for new trades this week. Just generally speaking, just a ton of strength.
Absolutely. Finishing up with the health sector. So healthcare, when I look at this, I see a sector that doesn't know what it wants to do. I just see neutrality. There's nothing I can say here that makes me want to touch this one way or the other.
I think you nail it right on the head. And there's a lot of conflicting signals. You have, interesting things like Lilly, held up really well last week. ABT, a nice little pullback. You've got other areas that are breaking support. Of course, you had Biogen that had the huge gap to the downside last week. So, and I've been this way for a while on it. I'm looking at this very much on a case by case basis. I'm not interested in the ETF one way or another as a tradable vehicle right now, because of kind of all the back and forth you're seeing. You can look at one chart and think, wow, healthcare looks great. Look at another one and think, oh my goodness, healthcare is just hideous. And you're seeing that a lot on the components. And so for me, I'm pretty neutral on this. I'm perfectly comfortable on either side on an individual component level, but on a broad perspective, I think looking at it as overall neutral, whether you're skewed a little bullish or bearish, I think overall neutral is the right call here.
Yep. And I mean, it used to act as a safety play because even, in bad markets, people still, take care of they pay their health bills. They take care of their kids. They're going to take their kids to the doctor, but it's not looking like it right now. It just looks like it wants to be neutral.
Yeah, I'm with you. And of course, we don't want to forget discretionary, Cody.
Absolutely not.
Discretionary sector. We tried, or at least we thought about trying.
Well, I mean, do you have to? But actually, we can't, because the sector's doing quite well. It had a similar break above, a key level as some of the other sectors like real estate and utilities did. Looks a little bit like communications or staples here. These are these, put this in the bunch that look bullish right now. And what I really like about this is how the market itself is kind of splitting between, we have some sectors acting bearish, we have some sectors acting bullish. And I'll get into that in a second, but first give me your thoughts on consumer discretionary.
Yeah, I mean, you pretty much sum them up. This is, if not tech, this is probably my second favorite area for retracements this week. I've been watching for the break of 112 for a little bit now. I read that as a very bullish signal. And I thought they held up pretty well, closing right around that 112, just a hair below it on Friday. A lot of bounce back here today. I'd like to see them close back above 112 just to make me feel a little more comfortable. But, much like tech, I think there is some room to run if that's the way that this market wants to go within this sector. Definitely has my eye going into the week from that pullback perspective.
Definitely agree with that. Now, real quick, I just want to kind of give a sneak peek at the gridiron. Now, like I was saying, there are different sectors that move different ways. Now, we did have, most things move backwards, and that's because we saw when the market has finally gotten to a point that it can behave the way it should. It's actually abnormal to have every single sector acting bullish at the same time. And that's what we have had over the past 3 months. Those meetings we were trying to say, okay, which of these is more bullish than the other ones and why? And it was really just the entire market was just roaring to the upside. So it was just pulling everything with it. This type of market is actually a healthier market to trade in because you can find your bullish setups. You can find your bearish setups. You can keep your portfolio weighted to the way that you want it to. That way you're not having to struggle to find some bearish picks. You can just go into these individual sectors and say, okay, I'm a little bit heavy bullishly weighted right now. Let me go find a bearish trade. Okay, well, which sector do I want to look at? All right, well, financials right away, most bearish. Let me go look at and see if I can find a bearish trade on financials. Maybe something's triggering to the downside right now. Make that trade, weight your portfolio correctly. I really like how we're having this split between each of the sectors, making it an easier environment to trade in.
Yeah, I think most traders would agree with that too. I'm never going to complain too much if it's so easy that you just have to say, oh, it's going up, let me go with it. But I think from a, realistic perspective, we want this type of a market where, like you said, we have opportunities that we don't really have to feel like and I don't want to use the word forcing because maybe that's a little extreme, but I'll use it anyway. I like the stock pickers market, and it's been feeling like we've been working more into that really over the last month or so.
Absolutely. Well, guys, that wraps up our Monday hashtag no justice. And again, get out there. Let's get some shares. Let's tell us how you like it. Tell us how you hate it. Definitely tweet at Matt and Tim. Let them know how awesome we are without them. But definitely enjoyed it. And we will see you again tomorrow and forever on outs until maybe Thursday, maybe.
So we'll see. They're going to have to pry it from our cold, dead hands, right? But yeah,
right.
Thanks for joining us, Halftime Crew. I'll see you guys in the recap today. You're certainly, if you never joined us in the recap, you're of course invited to join us at 4:30 Eastern. See how this day finishes up here. We'll of course see you same time and channel here tomorrow.